In this video, I want to share with you understanding futures trading margins and how it relates to algorithmic trading. We have our portfolio calculator here, and you can see a list of margins. I've updated the Tradestation margins and the Interactive Broker margins through today, July the 27th, 2022. What's interesting is that Tradestation has gone to 25% day trade margins. Volatility's dropped. And brokers are pretty good at handicapping future volatility, but anything can happen. I feel like we have not seen the volatility that we should have seen in this bear market, and that more could come. But maybe I'm wrong, and it all depends on what the Fed does. The Fed, we have FOMC today, interest rates, and they haven't reduced their balance sheet. We've talked about that, and so it's possible that we could have more distortion and more QE than QT, but in the short term, the margins have gone down, and I want to show you the difference. You can find Tradestation margins at tradestation.com. Go to pricing and futures margins rates, and then Interactive Brokers. Here is the URL, Interactive Brokers /EN trading, and then up there you can see that link for Interactive Brokers trading margins. And I've put those in the spreadsheet through today. And you can see how it affects the capital required in a algorithmic trading portfolio. And so this is what I'm showing right here in the margins column. You can copy any of these rows and paste it here. And so right now I'm using the June 30th margins, and I'm using 100% margin instead of the day trade margin, because sometimes those day trade margins go away. So the first one is the overnight margin. And this is what the exchange uses. This is the overnight margin at Tradestation uses the exchange's overnight margin. Interactive Brokers has a higher number. They have a different way to calculate margins, and they require higher margins. You can see S&P's $6,000 higher per contract. The day trade margin right now at Tradestation is 25%, but sometimes they take it up to 50% or even 100%, and then the exchange can sometimes take those margins even higher. So you have to be cognizant of that and have enough capital to add to your account if margins are increased. And typically those margins increase when volatility increases and markets sell off, which could happen again. So I'm going to show you how capital requirements have gone down for the portfolio, but they could go back up. And so that's the point of this video. I'm going to show you what it looks like with Tradestation margins, with Interactive Brokers margins. You can see on the NASDAQ, the NASDAQ for Tradestation right now is using the exchange margin of 16,500, and then they have a 25% day trade rate, and Interactive Brokers is 24,000 on the overnight, higher than the exchange, and then more than four times higher on the day trade margin for the NASDAQ. So some of the big differences here. Also, if you look at crude oil, scroll down here to crude oil, it's a big difference here. Almost 3 times higher on crude oil margins, 94.60. There is no day trade margin at Tradestation, but they've essentially cut their margins in half. Tradestation has since the last update. So that's good news, but it could go back up. Keep that in mind. It could go back up, and I think it's been as high as almost 27,000 at Tradestation, and so that could go back up. So keep that in mind when you have these algos, and volatility is shrinking, and it could increase again. So $27,000 crude oil margin at Interactive Brokers right now, 3 times higher than Tradestation, and so it could creep back up. Heating oil and RBOB. Let's look at natural gas. That's a market that we trade, and so copper. If you scroll down here, copper margin 6,000 and 3,000 versus 10,000. Let's see, where did I put natural? Natural gas is right here. 26,000 at Interactive Brokers versus 12,000 at Tradestation. So those are the margin differences. Now, how do we calculate those? The capital requirement calculates uses those margin numbers. And right now at the stock index portfolio, one E-mini, it requires 297,000. That means if all strategies take a net position. So for example, there's 7 S&P strategies and 15 NASDAQ strategies. So if you're trading the E-mini and it takes, if you're long 15 or short 15 NASDAQ, at the same time you're long or short all 7 S&P strategies. That never happens. So these are conservative requirements because I'm using 100% of margin, 100% of overnight margin, and I'm just assuming a net position, which I've never seen. Usually no more than about 30% or 40% of the strategies have a net position in any market in general. So these are conservative numbers, and this is a capital requirement right now. Using the June numbers with the 100% day trade matching the overnight, and then the stock index portfolio is 466,000, and the number for the stock index for the E-mini is 297,000. The stock index portfolio for the micros is 29,000. Now what happens when we use the new margin? So let's use the new Tradestation margins. I'm going to show you how to do this. One thing to note when you have, if you're an equities trader and you're not familiar with futures, is that that margins used in futures do not pay interest. Margin trading in equity you have to pay interest, but you don't pay interest on margins for futures. You can in fact earn interest on your margin money through T-bills. So that's another video for another time. But with the current Tradestation margins, you could trade one micro with $12,000. So keep that in mind, though. You need to make sure you have enough capital to add if the margins go up. If the market starts to crash and margins go up, you'll need to add capital, because if the market crashes, the margins will probably go up again. And so 112K for the stock index portfolio, and the 205,000 for the stock index and commodity portfolio. We still have it listed at 500K because the potential for higher margins could still be required in these markets. So now let's look at Interactive Brokers margins. So let's copy and paste the Interactive Brokers margins right here. And I summed up the total margins, just summed up almost twice as much on the Interactive Broker side versus the Tradestation side. So I'm going to copy this and paste it right here. And I pasted that. Now let's see what the margin requirements are. So it's 566K to trade this. Again, that's a conservative number because not all positions take a net position at any given time. You could probably trade it with 350 or 400, even at Interactive Brokers. But this is the conservative, safe number for the 500K stock index and commodity portfolio at Interactive Brokers. The stock index portfolio 22, would require 306K trading one E-mini at Interactive Brokers, and the micro would be 30K. So 12K versus 30K. So pretty big difference if you're a micro futures trader. And you want to start with the lowest possible margins, and so those are some of the differences. This is the portfolio calculated through July the 25th. It made an equity peak on Monday, actually on last Friday, July the 22nd, made an equity peak, and now 24th and 25th to the 22nd. And then this is Monday the 25th was down. The 26th was up a little bit, but I don't think it was that equity peak. I haven't updated the portfolio calculator for Tuesday the 26th, and today's July the 27th. So these are the margins through July the 27th, and so I'm going to put the Tradestation margins in here. I'm going to put the Tradestation margins right here, but I'm going to use the conservative numbers. I'm going to manually put the conservative numbers in here for the S&P and the NASDAQ. And you can make that decision on your side if you trade these portfolios to use a smaller number in this list, but my recommendation is to stick with the conservative capitalized amounts, and you can see here 30,000 stock index portfolio, and the Let's look at the stock index and commodity portfolio. 390. So 390, between 390 and 500K, around 400 or 500K is a conservative number to use because some of the other markets can increase their margins as well. So that's what I wanted to share with you today. Key points, differences in margins between brokers. The latest margin requirements are lower now at Tradestation, and you don't have to pay interest on your futures margin. So those are the things I wanted to point out in this video and show you how it works with the portfolio calculator, the capital requirements with the latest margins. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.